The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Yeah, Monday through Friday at this time, 11 o'clock till noon at 877-927-6648. Thank you to our hosts. Great programming, and we hope to have that going all the way through until 5 o'clock today. Let's look at the market. Dow's up at 19,908, up 65. S&P is at 2266, up 873. The comp index is at 5480. That is up $43. The VIX is now below 13. It's below 12. It's 11.90. That's buying pressure. Now, what's interesting is that the trend, the volatility index, which gave me a signal on Friday. Remember, on Thursday, gave a signal to say that within 2 days there should be a 9 to 11-point rally in the futures, and that should reflect positively in the cash indices. And well, we saw that on Friday. And then my theory is that after a while it should peter out. It should start to fade towards the end of the day, which it did. Then I had another signal in the Chapman Wave trend gauge on Friday, intraday, to suggest that on Monday, the Dow, no matter what the futures are in the morning, and they happen to have been up quite nicely, no matter what happens, there should be a minus. There should be negative a market action very early on before a rally is attempted. We got that. Now the Dow's up 63 and the S&P is up 850. So this is going to be fascinating for a number of reasons, because I've got kind of mixed signals here. I've got, based on a number of aspects, I've got the some kind of a limited upside just in the shorter term for the Dow and the S&P. The QQQ series, and this is going to be very interesting, unless it's recycled, it looked like a peak F top, but I really didn't have any very negative indications at all. So we've just done nothing, just watching it closely at 121.11, a high on the 15th. Today's trading at 120.75. So it's just underneath that high. Even more important is that the MACD is still very strong and the stochastics at 85%, very strong, and the weekly chart is holding very nicely. Hey, here's what's interesting. The IWM, which we had a very nice position in the 300% long, recently took profits. And then on Friday, we had a quick trade. I wanted to say before 11 o'clock to buy it. And I forgot that in the end, when I typed it up, I forgot to put before 11. And it was acting incredibly well all day. And then right at the end, it started to pull back very sharply. And what happened is, look, went right down to the 9-period exponential moving average. But I have to believe that this is going to make a leg D. So we went back in this morning at the opening, and we're going to see if we can try it again. Took a tiny point, what was it, a 40-cent loss on a $136 position, so 135 actually. So this is what we're looking at right now. We're looking at the chance, and I'm going to do this in my webinar tomorrow. I'll talk about that in a moment. We've made a peak A and a peak B in the 120-minute chart. What's needed, I haven't really got a buy. I've got a buy signal, but not a buy mode in the 120. I need to see the stochastic move. Actually, it's moving quite nice. It's at 48. I'd love to see it more at 55 to 57%. But it's the MACD that has to cross positively, and it hasn't done that. So the moment it does that, and the moment that the IWM Russell 2000 iShares can trade 1 penny above the 137.52 high at 11:30 on the 16th. That was on Friday. Starts leg C, and that goes to a buy mode immediately. And then I think there is a chance this week that somehow or other we get just above 138.82. At 138.83, we start leg D. Then we're going to become a little cautious on the market, I believe. All right, in the meantime, back at the ranch, we're looking at the New York Stock Exchange right there. New York Stock Exchange I made a peak F/P. I'm more inclined to think of this as an F right now because the MACD and stochastic are fading. We have no position, but this is what I'm looking at. The New York Stock Exchange has to get to 11,253 to start to have a breakout, meaning that the buy mode is actually confirmed in the monthly chart. At this point, it is a buy mode, but it's an inside buy mode. In other words, it's in leg C, but underneath the previous major peak D from May of last year. And that'll be a very comforting factor, because then I think that I can say, rest assured, in 2017, at least in the first quarter, we're going to see some excellent action. Now, I want to go to gold, because gold is attempting right here to try to form some kind of a bottom. My only concern is the stochastic has rallied quite nicely from in the single digit down at the 5%. Was that 5%? If I can just find the darn thing here. Let's see. 6% down the 5%, 6% area. And what's very important is it went all the way to 20%. And yet it has not been able to see a successful test of the 9-period moving average and break above it at 1153. And that's really going to be my benchmark. So I'm suspecting that the gold is still just trying to form some kind of a base here. I think it's really close to at least when I say a bounce, I don't mean just a daily bounce. I mean a bounce that can last 2 weeks, 3 weeks. But to do that, you have to see the dollar, which is just like the IWM at a peak C and has not gone above that peak C of 100. I forgot to type that in. 103.56. Now I will type it in. 103.56 in gray. Don't make it blue. Gray, because it's still in a buy mode, trying to move higher. So I just want to label it. Okay. So a blue C, but a gray number, because I don't want to confuse it with a red top. So what we're looking at here is that there's a good chance that the dollar this week somehow, some way, will in fact get to the 103.57 area for leg D. And then we've got to make some decisions. Now, here's the other thing. In the euro, EUR/USD, in the euro-dollar currency pair, it's a little bit like the gold contract, silver contract. It's pulled back very sharply. It's trying to form some kind of a base. There is enough evidence to say that in this area, when I say area, I mean going down to 103.50 is at a 104.36, and 1.052 is the resistance. So within this context, my thinking is that there's a good chance that the euro is getting close to forming some kind of a basing area, and that if the dollar starts to, it makes a leg D and then pulls back sharply, we will find very quickly that there's a bounce of a few weeks, 2 weeks, maybe 3 weeks in the currencies and in gold. I'm not sure it's yet ready for a major move to the upside. As I say, I think that it's limited upside in some of the indexes like the Dow and the S&P. At the same time, right now, I think there's also limited downside, but I suspect we're getting close to the period where we'll see lower lows and a cap on the upside. That's the best way that I can put it as the market digests these big gains. So we've got a break coming up right this very moment, and I'm going to just say to you the Dow is at 57, S&P's at 7.40. Nice action considering that Friday had to pull back a little bit more today. So this is a good bounce. I'll be right back. Basil Chapman, Tiger Technicians Hour.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750 855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. So just some real quickly, I had a question about, never looked at this. In fact, I didn't even know it existed. I wish I had known it existed because this is something I like to follow. It's the floating rate iShares floating rate bond ETF. It went into a peak D in the, let me just do this. From the low that was made right here at 50.65 on the 6th of October, it made, look, a peak A, peak B, double top, peak C is actually an overlapping wave because there's your peak B and never broke above it. Pull back a little bit, made a gray peak A, a little gray peak B, and then bam, goes to peak C. And that usually says you should go to a D. Well, lo and behold, you go to C, pull back sharply, and then you go again, A, B, and then it's overlapping waves. So it's C goes to D, and D goes to E and F, and at F you get the sharpest decline. This decline has gone to trough A, trough B, trough C, and it's in leg D at this particular moment. Now, what's really interesting about this is that I think I drew this in during the break when I was asked the question, and I've got a rectangle formation. The rectangle formation says that bonds, this iShare floating rate bond ETF, should trade between a low of 50.70 and a high of between 50.80, and it could even retest the high of 50.85. But this should be the range for a little while longer, maybe even for 3 weeks or 4 weeks. So we'd be looking at that as well. And then you've got the monthly chart. I really can't do very much with this monthly chart. It just doesn't have enough history for a monthly chart. I mean, it has, but it's not enough history that I can use. Now, here's a couple of things that I want to just say. Yeah, trading range, the 200-period moving average of 50.64 should be quite strong. And the resistance, I'm suspecting at 50.78 to 50.80, somewhere around there, is going to be strong. So yeah, just trading range. And that kind of coincides with what I'm looking at now. If I look at the TNX.X, let's see, we've gone to a peak E, holding quite nicely. Now I'm going to be discussing things like the trend lines, like this overlapping wave. I did that last time in my webinar. So if you, because they're tiger dollars, it's donation time and everything to the Salvation Army, it's just really a win-win situation. Let me just show you something you might be interested in. Here on the front page of TFNN, simple technical tools to analyze charts, a 3-part course on the Chapman wave. So already had webinar 1 is already gone. That was 2 weeks ago, just under 2 weeks ago. And tomorrow night is the next one, but it's archived. It's all archived. You can go through it as many times as you want. You get my newsletter at the same time, which goes through the waveform every single day. I showed in the different charts every single day. I show the, let me go to this right here. The Dow chart is there. Look, here's the Dow chart, and I showed that we made a 2-bar reversal. It's called Chapman Wave 2-bar reversal, and we've only gone sideways. And sideways trading ranges can actually last a lot longer than your patience. And when they're at the top, very often they go sideways. They might break once to the upside, but mostly they're going to come back and test the lower part. And here we've got the 120-minute chart. Did a big study for my subscribers over the weekend. We've got a Chapman Wave 5 at a peak G. Unusual to go to a peak G, but it's in the 120-minute chart, it's saying that you haven't broken down. You're really in this trading band with the, what do we call this, a flag formation. But if you look at this one, yeah, with the technicals have been very poor. And yet the price is held very well. Price is the arbiter of a trend, and right now it's saying the Dow is holding very well. That's really what it's saying. So let's get back to our story here. So yeah, so for the floating rate and for the TNX, I think based on the weekly chart, I drew this in. I'm going to just draw it in a little bit differently so that you can see what I'm talking about. This is what I'm talking about, that in the rates, I think the upside for the TNX, the 10-year Treasury bond rate, at 25.47, made a high 3 days ago at 26.21, and I think it's in a trading range. It can go a little higher than that. It might recycle, but it can 26.30s, I think, is the upside. At this point, I'm going to call it not the limit, but that's really weak. It's going to be tough to break out. But on the downside, I don't see any reason why it can't be pulling back. It could even pull back over a 3-week period to the 23s. And that would be a big percentage move down, but not from where it's come. It's come from a low of 1.336 and a high of 621. It's almost a double. That is a huge move in interest rates. Okay, I've got that now. WMT was a question I had. Can you look at Walmart? Haven't really looked at for a couple of days. ABC has gone to an alternative. Yeah, I think Walmart. Let me just get rid of this because it did not pull back in the H formation. Instead, it's making a cup formation or a V formation. Yeah, I think that Walmart, let me put it this way. Based on what I've done and my wonderful limited research by driving through a couple of parking lots at the malls, I think that a lot of people are doing their shopping in the retail stores. They might also be doing the shopping and looking and the buying in different places. But if you look at Amazon, Amazon says to me, this is not going to be the season that makes their most money. I think this is going to be a season that costs them a lot of money. I think they spend a ton of money trying to get, everywhere you go, you see these Amazon trucks. At least I saw the Amazon trucks. And my suspicion is that the expenses are outweighing the profits. That's what the chart seems to be saying, and that Amazon is going to disappoint in its next earnings report. It's kind of the way it looks. But if you look at the RTH, it's not great, but it's holding better than you would expect. And that says to me that retail is going to be probably one of the higher years of sales, but not one of the higher years of profits. If I'm looking correctly at the charts, that's what it's saying. Oh, good. Now let's go to the IYT, a question about that. So IYT made a peak D doji top. We'll talk about that when I do my webinar tomorrow night. Talk about just a couple of candles that I use all the time. You know, Steve always talks about, he does a lot of work with candles. Over the years, I've just refined it to maybe a couple of candle patterns, and that's it. It's fine for me. I don't want to overload. I find overloading just really means at a certain point you're going to say, wow, if this, oh, but wait a minute, if that, and then you're going to get a third saying, but maybe neither, and now you're all of a sudden very confused. I prefer not to do that. So if you're able to, if you understand the candles well enough, that's fantastic. I just find I need a couple, and that's what I use. And there's that doji top at a peak F, and the IYT, which is the rails, the iShares Dow Jones Transportation Average Index, and that's suggesting that is a peak D that was made last week in the weekly chart. I drew in the rectangle. I'll just raise it a little bit so that you can see what I'm talking about. I think IYT is stuck in a range right now. As I say, I think there's upside limited. I think we still do. I'm not sure. I'll have to check, but I believe we still have our insurance short on the S&P right at this moment. Haven't added anything yet. We might be adding, for those of you who get my newsletter, number 5 that starts with an E. That I made a mistake on Friday. I started typing in during early morning because it looked like it was absolutely going to go to our short position, and I typed it in as if it was. Then I completely forgot to rework it this morning. For some reason, I never saw it, but it still could be filled. In the meantime, just remember that we don't have it, and we might have it if it gets there today. Next question was, well, I think I covered that without even realizing that it was going to be asked. Done that. Oh, Exxon. See, Exxon's very different to Exxon's made a peak D underneath the previous high. I think it's going to consolidate a little bit, and CVX is a slightly different chart, but with almost the same implication. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. The holiday season is here, and TFNN Salvation Army Tiger Dollar Special is back. Right now, you can get a 25% bonus on your purchase, and 10% of whatever you spend will be donated in your name to the Salvation Army. The sale only comes around once a year, so don't miss out. Tiger Dollars are a great way to add extra savings to TFNN newsletters or services, and they never expire. Get your Tiger Dollars before the sale ends Thursday, December 22nd, and get your 25% bonus while donating 10% of your purchase to the Salvation Army. For all the details, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, before I forget, for the webinar that's coming up, I have been sending emails to the attendees. How can I put this? I've sent the emails with the questions I've also done it, shown it as a subscriber in my newsletter. I've shown the questions and answers as well. There are quite a number more that I've sent to the attendees. So if you, for some reason, haven't got them or you just haven't had a chance to look at them, just send me an email. As you know, I've given you all that information, and I will send some back to you, and I'll give you some new ones so that you can check them. I want you to practice. And also, I've asked attendees to please just Google MACD, the moving average convergence divergence, and the slow stochastic, so you can be ahead of the game. I'll be discussing it tomorrow. Of course, I will be going through it very thoroughly, but it's kind of lengthy, and I just thought maybe it would be best to kind of get a heads up to do that, because tomorrow we go, you see, I'm doing the naked chart here. Here's the E-mini. Here's the S&P cash 5-minute chart. There's your peak E. The last one was a D over there, an E over here. They keep repeating over and over. And this one stopped right at the 200-period exponential moving average. So those are the techniques. And then when you add the stochastic and the et cetera, like this here, I think I can get it. Yeah, when you add the MACD and stochastic, look what happens. It shows you the MACD was turning down, shows you the stochastic was pulling back sharply. Now it's under 20% at 8%, trying to rally. And you can see the price is trying to rally. So those are the things we're going to be discussing, and how you go from a buy signal to a buy mode. Look, peak A, peak B, peak C, and there's your peak D. This is the S&P 2-minute chart. I didn't even realize that. I just look at charts and see the price movement, and I start counting the names immediately, alphabetically. So, okay, so that's all going to be done. Tomorrow we get into the nitty-gritties. The first one was really the core of the waveform. What we always look for, I wonder if I can find this right here just to make it real easy. And then we'll get back to the charts. Here we go. Oh, I hope I didn't erase it. Is it there? Why does it always disappear? Maybe there's a limit, and then it just gets bumped off. I think that's what it is. There must be a limit, and then I can't. Yeah, that's what it is. That's why they disappear. All right, well, peak D is what we always try for, the fourth highest peak. Just disappeared. All right, doesn't matter. I'll redo that. Okay, so I've got it right here. This is my webinar right here. So using the 9-period differential, what the MACD looks like. We use the thin line, how it can help you. This is the confirmation of a buy mode. I talk about the slow stochastic, what you're going to be doing, what you're looking for. And here, right here in the very beginning, I'll show you, this is the chart that we're always looking for. A pullback, the lowest, most obvious low bar, then mid account, each successively higher peak, label them uppercase A, B, C, and D. That's what we look for. At D, other things can happen. And that's a big thing to get you to D. All right, so yeah, a couple of questions coming up. EM, so the FXI looks terrible. This is the China 25 ETF. Something's not good with this weekly chart. It's starting to pull back very sharply, made a peak D. Should have put that as a down arrow right there. So in a sell mode in the FXI daily, and the weekly is in a sell signal. I'm pretty sure that I can call this a sell mode. I don't want to do it too quickly. Yeah, it's a sell mode in the weekly chart. Monthly is still looking quite good. Okay, so that's that. Now let me do this. Question about Telephone of Verizon. I didn't even want to pick Telephone here because it's moving right to the trend line I discussed as being very important. We were in it in the 34s December a year ago. Just about 2 months ago, we were out with a very nice gain. It went up to 43.89, but we got out of the pullback because we were getting the dividends and we stayed for the last dividend. So we were out back in, I think it was September, in the 40 area, just about 40. Very nice gain. 6 points. Now I missed getting back in. I just kept saying, interest rates, it got hit so hard with interest rates. How's it going to survive? And meantime, look what it did. It went from 36 to 36.10 on the 14th of November, trading right here at 41.93. Oh, man. Even here, we tried to get in, but we missed it by a little bit and didn't get back in. So what can I say? Very good move. So Telephone is looking very good. Now the question is, do you want to get in here? I do see some point getting back to the 39s, maybe even 38 area. To me, that would be the preferable move. So here's what I'm going to recommend. If you really want to be in the dividend type stocks, you could just nibble here. It's really the position that you're in would say, I'm getting in here because it could go about a point higher, 80 cents higher, but then it's going to have a digestive phase. But if it has a very small digestive phase and then goes even higher, I'm stuck and it's going to go to leg D at 43.90 without me. So I want a little bit. So you start a position here saying, my real position will be somewhere around 39.70 to 38. You can even think $40. I'm getting, for us, we would be getting back in because that's where we got out. So that's really what I'd be looking at because it is acting well under these conditions. That's telephone. Verizon question. Let's see what I'm doing about the Verizon here. Oh, Verizon is in leg B, C, D, E. It's in leg E. So they're both getting somewhat extended. I think by this time, Thursday or Friday, I think we'll be pulling back some. They're acting very, very well at this particular moment, though. That's all I can say. Next question is, yeah, Paul, you were correct. We didn't get into that. You weren't wrong. It was my error. I put it in on Friday, and when I reread it, for some reason, I meant to rewrite it with the same entry point, and I didn't, so it was my error. Now, here's something that I wanted to talk about. Within the this is what I'm looking at. Buy mode daily, buy mode weekly, buy mode monthly in the Dow. And that's very positive. And that's suggesting that the next deepish pullback, it doesn't have to be deep-ish pullback, says you can start. If you haven't, remember I've been talking about holding back a little bit all year because we want to get it in for that part of the coda that really starts to accelerate to the upside. Well, I'm thinking that with the XLF, that's the financials. If I can just type it in somewhere here. Let me go to the BKX because that has more history. The BKX index, which is the Keith Brewitt KBW Bank Index, pulling back after a PE at 93.65 on the 8th of December. I think it's going to be pulling back. And my thinking is it doesn't pull back all that far, and then some people are going to want to be buying. 86 would be fantastic because that's the 9-period moving average. My thinking is that at 80, we're going to be lucky to see if it gets to 88 and holds. If it gets to 88 and breaks down, that's one thing. My thinking is that a lot of people miss the buys in the financials, and that's where they want to be because somehow or other there will be some loosening up and the banks are going to benefit. Number one. Number two is the weekly chart is so spectacular. Yes, it's gone parabolic, sort of parabolic, because I would like more time for the move to the upside to call it really parabolic. So I'm thinking that I'm prepared to, I put this flag, this consolidation in earlier. I'm going to put it in a little lower. I'm going to put it in, I'll do it to the top, but I'm going to make it a little bit lower. And it goes towards that 9-period moving average of 86 in the weekly chart. So I think there's a consolidation coming up. It's been a spectacular move. So it's unfolding right now. So there are certain sectors that are really on fire. I think that the SLX is on the way down. It's just having a good breather. Yep, there it is. That's the steals. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. It was just pointed out to me in the den that the EWZ Brazil Monthly ETF, that's called the iShares MSCI Brazil Capped ETF, from the peak F top high back in May of 2008 to the highs back in 2010 and then April of 2011 to the exact, to the point high of September of 2014 to the exact double top highs of October and November of 2016, there's a trend line that was hit. Make this green, make this red. This is what I teach in my course, how to use these trend lines. It's called the Chapman Wave Inside Wedge, Inside Track Repellent Zone, and right there, it got repelled. Unbelievable how that happens. Look, right here. Look at that, right there. It could not break out. If it breaks out and goes to 39.50, there's a good chance 40.60, the 200-period moving average, finally gets tested after breaking down in 2014. Right now, it's pulling back, and that weekly chart says, uh-oh, problem, repelled at the 200-period moving average at peak E in the Chapman Wave. This is the stuff we're going to be talking about tomorrow night. Look at the H pattern going to, look at this, H pattern going to an M case pattern, lowercase m, right there. So watch out. If EWM takes out 31.27 support from the 15th, 2 days ago, 2 trading days ago, that's not good at all. Then it's going to get even, there's not too much support, in fact, until you get to the gap. Well, we'll talk about that, 30.55. Wow, it's a long way down. Yeah, okay. So what we're talking about now is that, you remember we looked at the cash, the S&P cash, and I said this is a peak E, put a down arrow. It went right through the 200-period moving average. You see the MACD and the stochastic, you see these moving averages turning down? Now let's see. Just for fun, I'm going to add this right now because this is what I'm going to be teaching. You might still be interested. There's still time because it's all archived. It's archived, so you can just go over it as many times as you want. You can email me. I've been sending back, people have sent me charts and have sent back information on the charts. What's really important about this, look, that was done with no MACD or stochastic. When you put the MACD and stochastic it gives you another dimension, but it's a dimension I prefer you to start understanding after you use what I call the naked chart, or basically just the chart without these big moving averages. Look, now the stochastic's down at 4%. It's about to try to form a little bit of a U-shaped turnaround. If it's a V-shaped turnaround, then there's a quick move in the S&P cash from 261.30 up 33.25 to try to get to the 226.329 area. Right there, the red moving average, that's the 9-period moving average. This is what I'm going to be teaching. These things, look how consistent it happens. E, bomb, D, D. So this is a very cyclical, regulated kind of move. How you trade it, it's almost like two separate things. You can identify it. I try, as you know, in my webinars, I try not to say, look at this chart. It went from a trough and it formed 4 perfect peaks to a D. Then it pulled back and it formed 5 perfect peaks to an E. Of course it did that. You're just looking at it. That's what it is. I'm going to talk to you about the chart pattern right here. This is the EWZ. What is the pattern that's forming? Why? It's the pattern I talk about, the H pattern. Because if it takes out the left side low right here, 3120, be careful. It could go down quite a bit more because it hasn't got support. This also looks like a kind of a head and shoulders pattern. It was also repelled from the 200-period moving average. I'm introducing the moving averages tonight, the 9-period tomorrow night, the 9 and the 200. So that's all very, very important. If you're looking at, I want to teach you how to fish. Let's put it that way. I sometimes miss these things. Remember, 6 months ago, I gave you the stills, and we had them just for a moment instead of holding them and just holding them until the most recent sell signal, because they went so quickly after a moment that we couldn't get back in. And that's what happens. This way, when you understand the methodology, you don't have to, what you can say, I like to keep the risk very, very tight. I don't like to have big risks in terms of price. I don't want to see a decline of 20%, even if after that you make 40%. 20%, the person might have to go out, might have to need the money just to get, they're down. Maybe they can't wait 3 months or 6 months to see that extra gain. So I keep it fairly tight. But if you can have that flexibility, you can use this independently. And that's what I love. And not only that, look, here's the left side, right side price time match on the SLX, which it did in a shorter period of time, but it couldn't hold. That was to that area right there. Left side, right side, the plumb line. I teach you about the plumb line. So it's going to be fair. I love this. The timing of this couldn't be more perfect because we're just at a moment of consolidation in some areas. Other areas are trying to build some strength, and we want to see which ones are building strength for the move into January, February. And that's what I'll be talking about. All right, let's get back to the questions. Oh, I had a question about, oops, let me just get the, well, what about your Dow Quartet? All right, well, the Dow Quartet is GE holding really well. In fact, today's high of 32 is testing the 32 round number high that was made just 6 days ago. If it breaks out above it, I think I'm going to call this more like a C than an F. We'll have to watch this very closely. So we're long 2 positions. And so far it's holding nicely. GE, IBM, no position there, but it's done very well. Now it's kind of ready for a bit of a pullback. F/E in the weekly chart. That monthly chart broke out nicely from that trend, same kind of trend line we were talking about before, except this time it broke out and it's got the Chapman wave falling axe formation. So if it holds here all the way into January, if it doesn't break under 160 to 157, but instead holds here and goes a little higher, IBM saying, hey, I'm one of the stocks you want to be looking at for 2017. Triple M didn't do well the other day. What's it doing today? Oh, it's holding quite nicely. It looks like it's going to try for the leg D. And there's that peak C1, C2. We started it last week. I gave you, for those attendees, I gave them a C1, C2 on the SMHs as an example, as well as another one. Here's another one. I'm going to put this down so I remember it. This is the Triple M. C1, C2, where's my book, 3M, C1, C2. So this is trying to break the trend line, but I think it's going to struggle a little bit. And UTX, my 4th one in the Dow Quartet Index, we were long, made a nice little profit, had two positions, small profits, but nice. And now it's kind of struggling. It's at a peak E, and I had no choice but to put a down arrow. It could go a little higher. Then I have to use that little inverted V-shaped pattern. But I think it will make us a D at some point soon. So I'm looking to maybe get back into UTX on a deeper pullback, because I think it's going to go higher, and it's on leg C in the monthly chart, and that's very nice. So yeah, UTX, there's a consolidation going on, even my Dow quartet. That's really what I wanted to say to answer the question. And then I had the question about, well, I was thinking of it earlier on, because it pertained the VIX. The VIX right now is coming off a little bit of a low. This morning the low was, let me put it in here. Yeah, the low was 11.86 and it's at 12.04. I have a feeling that right here, there's going to be some basing. And I said that to subscribers. I wouldn't be surprised in the next day or two we actually start taking a position in the volatility index. I'm not sure yet. I have to wait for the day to close. But it looks to me as if the VIX is getting ready for something. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. I was asked if I look at AAA. AAA has made a double top. Did I say AAA? I mean, AA. I was looking for batteries last night. That's funny. I think I said AAA. Okay, so it made a peak E on the last move. It's pulling back. I think with the steals, it's had a big run. I think it's just taking a good breather. It needs a breather right now. So Alcoa Let me just finish that. Alcoa trading at 29.08, made a very nice high in the 32s just the other day. The exact number was 32.30, right here. 32.35 on the 12th of December. Now it's trading at 29.07. No big deal, 3 points. So it's a 10% pullback. But I think it's going to go back deeper than that. I think it's going to hit the 27s, maybe the 26s. Then I'm going to reconsider whether I want to get into Alcoa. Now, this is going to be very important. I mentioned the same thing for X, which is U.S. Steel, that I think it was done last week. I said I think it's done for now, the steels. So the sector rotation is going to be very important. In the remaining time we've got, let me just briefly go through this again. I'm going to be showing tomorrow, for instance, here we have, let me put this up, the IWM, which could fail today. I'm just saying that I think it's going to, there's a chance it will somehow get to that level of 138.83 for a leg D. But there's also a pattern now. What I sent to subscribers over the weekend and last night, or to I think, I sent it to my site, my Traders Corner site, that there was a chance. There's this pattern I call the falling axe. This looks like an axe, long handle, open blade. That's an expanding cone with lower highs and lower lows. If it breaks out and sustains the breakout above, remember we're looking at the same thing in IBM, that becomes really important. That says, yes, I want to go and test the previous high, that doji candle high. And then you get the cup formation. If it starts to fail by the end of the day, and you're looking at something that instead of being at 136.60 is trading almost at the candle of 135.63, the low of Friday, that's just not good news at all. And then it's going to fail and take even longer to finally get to a D. That's the way I'm looking at the market. I'm going to explain. See, the MACD and stochastic are not all that strong, but it did say this morning if it held that early strength, then the MACD would flatten out a little bit and the stochastic would have a nice bounce, just enough to allow you to break above the high of last week, which was 137.52 in the IWM. Over here on the right, this is the Dow. I'm showing channels. I'm showing how you can just take trend lines. Look at this simple trend line. And now you're in Dow, DOW, Dow Chemical at 58.47, up 6 cents, is right bumping in the monthly chart up against that inside track repellent resistance zone. Those are the things I'll be teaching. So if you're really interested in trend lines, channels, inside track, mini channels, how they can be repellent zones or propellant zones. If you're interested in the 9-period moving average, we've got that support over there. If you're looking at the MACD, why this is, I drew these two lines and said the technicals were much lower on the move up to peak C, that doji high candle right there, than it was even at peak B. And they can happen sometimes in an accelerated move, but you've got to be careful because you've got waning technical strength. Okay, so now back at the ranch, the day is young. We're about to wrap up 14 on the Dow, giving back some nice gains, up 289. S&P is a little bit stronger, and we'll be watching this very closely over the coming few hours. Most importantly, if you are interested in signing up, this is just a great time. Not only that, use those Tiger dollars. The Salvation Army gets a benefit. You get a benefit. TFN is able to send out, really a nice lump sum of money. It's very important. So here we are. Dow's up 11, starting to fade. We're in this triangle formation right there, and it's going to be interesting. Which way we're going to really break out? Break down or break out? So as I said, we've got a mixed portfolio right now. Got longs. We do have some short position in the S&P. Have a great day. I'll see you back here tomorrow, and check in to the front page of TFNN and check out everything that's being offered right there. Have a great day. Bye.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,